The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another wonderful day of programming at TFNN with me, your humble, lovable, squeezably soft host. And of course, welcome to the China Syndrome.
I like Chinese. I like Chinese.
Oh boy, if you're short, you've got to like the Chinese. They can't seem to figure out the markets quite as well as a lot of people thought that they had it rigged. And again, it is a very, very interesting market. And of course, that's the Chinese curse. May you live in interesting times. Of course, if we look quickly here as we start off the show at the low of the day on the S&P cash at 1944.14, we've got fairly significant volume up about 350 million shares from yesterday at this time, maybe 400 million shares at 2.9 billion shares. I've got to set, I've got it. Somebody said I didn't have my DIN chart up. I did. It went away. Let's put it back up again. There we go. Anyway, we've got a fairly interesting market out here, but we are getting downside now with a volume. I wrote in my newsletter this morning that one of the things that you really want to think about is when markets actually move off of a long-term basis. And again, I brought this up in my newsletter this morning, but one of our contributors in the early 2000s was a gentleman named Tim Ord. And as we were getting kind of to the 2003, 2004 lows, I think it was 2003, March, maybe. I'm going to have to go look these things back up. I've got pretty decent records about what I did, but I didn't, it's not easy to look them up here. But anyway, somewhere around there, wherever the S&P low was, I remember the number was 765. And he talked about, well, we're going to be making a low out here, but don't be real fired up to start seeing volume delivered right off the bat as we go back up. And he said kind of the same thing. If you had a real long bull market, do not be surprised to see it take a while for the market to actually start building up volume to the downside. Of course, everybody's been tricked and have been tricked 100 times before that is the start of the next very big bear or bull market. And of course, had everybody pretty much saying that the market was going to 500, I think, on the S&P cash, down there at about 765. But I kind of took that to heart, went back and looked at it. It seems to be a fairly good generalization of the markets, and that is if you've had some kind of real long movement and 100 head fakes, do not expect the volume to really pick up and drive, and probably until a while. In fact, I remember because pretty much everybody, I think, around TFNN had been buying those lows. But until we started seeing volume, the S&P had almost gotten to about 1050, maybe 1100. I remember a lot of people at the time when I was trading in a trader's den that was not TFNN were all, they were bearish all the way up, 250, 300 points before they got bullish. And then, of course, we went sideways for a long time, and it started to really frustrate them yet again. But I've always taken that to heart and kept an eye on it. We're off 46 points on the S&P cash. Again, you know, tapping on 3 billion shares as we start the show. So just keep an eye on that. But, you know, we've got China coming out tonight. If you have not heard, they have lifted their trading stops. So who knows? They could be down 50% overnight. They could be up 5%. My guess is that they will be out there trading. And of course, if you've seen the dollar out here, we've had a fairly significant move to the downside in the dollar index. And I've talked to one of my good trading friends that is in the Forex business. We've got pretty much now a raging case of devaluation, rolling devaluation between major economic groups. Right now, he said that pretty much when the trading stopped, the cash and the buying of all foreign currencies went to pretty much huge levels that he had not seen in years. So apparently somebody was open at the Treasury and maybe at the Fed and said, just let the floodgates open. There's no way we're going to let the dollar take off and let the yuan get devalued. And we're going to, if they're going to slap us once with devaluation, we're going to do it twice. So we've seen that out there today. And like I said, the only thing you can think about now, in fact, we talked about it yesterday, was that I was looking for this third gap down to actually start the process of finding complete demoralization in the marketplace. Do we have it now? No. I see 20 people everywhere, TV, calling me on the phone. Is this a bottom to buy? And it just makes me think that we're going to at least have one more day into Friday. At best, I think the market could stabilize if China does well tonight. At worst, we could see the China syndrome continue on for another day. In the meantime, it's time to get this party started.
That it's all just a little bit of history repeating.
It certainly is. On this day in 1914, the first commercial passage through the Panama Canal is completed as a French ship, the Alexandre La Valle, emerges from Pacific locks 4 decades after the canal was first proposed. The shipping distance between New York and San Francisco is now a mere 8,000 miles shorter. And of course, they're redoing the canal. If you have not paid attention, I think that's going to change a great deal of what happens in the big carriers. The new canal, which will be open sometime this year. I didn't see the exact date. It said 2016. These new ships will be able to carry over twice as much. They will be basically 50% wider and 50% longer. And right now, some of the cost is being absorbed by ships taking as much as 7 days to wait to go through the Panama Canal. That should be reduced to about 2 days once they're fully operational with a new, wider, and better Panama Canal. Question in the den: can BBRY be saved? No. It's dead. It's one of those. It's Radio Shack. They're going to pick that thing apart when it goes bankrupt. The next bunch of vultures, the bankruptcy attorneys, will be all over it. By the time that it's done, there will be nothing left of the ashes of BlackBerry. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And a couple notes from the den out here. First, Duffy in the den asked me if I remember Palm Pilot. Well, Duffy, what do you see here? What do you spy with your little eye here? I've got my own Palm Pilot still. I think this is, 1995? Does that sound about right? Anyway, still have it. I don't know if it works or not. It's still in my jewelry drawer. But, yeah, it's there. I had one of the... In fact, I had a couple of them. But, yes, in the Grooveyard of Forgotten Companies, Palm Pilot, soon to be BlackBerry. Another good question in the den from Pete D was, do you think... driverless cars or any of that kind of stuff could save BlackBerry? The question I'm going to ask is, if you're a big Ford or Dodge or anybody else, are you going to go together and start working with BlackBerry, company that you're pretty sure going out of business? I think everybody thinks is going out of business. Are you going to go to Apple or Google or Microsoft, companies that are doing well, stock prices are great, or a company that's circling the drain? And that is the problem. Once you get the stink of failure and despair all over you, as BlackBerry does, it's hard to get it off. Oh, I got an HP 2000 LX2. Ooh, yeah, cool. Anyway, on to and going on to news. Yesterday we talked about, or actually Tuesday, I said I'd bring it up today, is the chart from Davidow. There's a book called Crossing the Chasm. I recommend it highly to anybody trading technology stocks. It is how they market technology, and it's, as a trader, a good idea. But I was talking about how the curve, or there is a bell curve of technology where the cash comes in and out. I couldn't find the chart where the cash comes in, but actually, I think it's in the book, but he splits it apart where how much margin is made at the beginning of a technology, how much market is made at the tail end. And he basically breaks it down into innovators, where they make a product, early adopters who actually buy the first version, the early majority where everybody kind of thumbs their nose at everybody else and says that I'm so much better than you because I bought a Tesla. And then, of course, when everybody has a Tesla is the main majority, or everybody has a cell phone. And then we've got the late adopters and then the laggards of it. But that bell curve not only tends to have a fairly decent reality back to volume, but it also has to do with margin and profit. And we were talking about Apple and the rest of the companies that are around making products that go into Apple, which we'll talk about. In fact, I've got a new Apple theme song out here today, now that it's under $100, and we'll get to that, I think, in the near future. But if you're interested in it, it's called Crossing the Chasm. It's a great book about technology and how it's marketed to people. I stumbled on it in about 1990 or so, or 89, and it still holds up incredibly well today, 25 years later. But I based a lot of my marketing on this and a couple of, just 2 other books that basically had everything I needed to know to put together about 4 new businesses for the company that I was a partner in. Anyway, very interesting chart. Of course, we're going to have a special event, and that event is going to be about shorting stocks. It'll be on January 20th. For my subscribers, you still have a chance to sign up for that if you're a subscriber. And of course, if you're not, you can get a 30-day trial for it. We'll be talking about that. But there's a few more things. Later today, if you're interested in shorting, I put together kind of a mini white paper for everybody about the problems that I'm going to be discussing in this. So if you do short and are interested in how short data is reported and where it comes from, you can take a look at that. It's the email will go out from TFNN later today. It links to a PDF, I think, on the website, and you can go through it. And this isn't one of those horrible 20 great tricks that will make you a billionaire kind of link. I think there's one paragraph in there where I refer back to maybe subscribing and checking out this seminar. But if you're especially new, you don't understand shorting, or at least how data is reported and why there are problems with it, take a look at it. We'll also be in that discussing some new software I am writing. This is a very early pre-release version of it. But if we wanted to look at anything, let's say like AMZN, and look at the data on it, I'll clean this up before the presentation. But now I can look at any time and actually see the implied short volume for the day. If we wanted to look at Amazon, we could go back and see that there's a lot of things going on besides this. So don't run out and try this at home, children. Tell you, probably read my white paper. But if you wanted to see the big signal out here that Amazon was ready to start moving down along with the rest of the market, it certainly was the last couple of days of the year when I started seeing a huge short interest come into this market in case on Amazon. Normally, even though the shorts may be covered, you're going to have somewhere between 13 or 14% of all the volume in Amazon each day be short. On the 29th, you saw 20% as it pretty much crested those highs and hit the closing price, and a high closing price. The gentleman of Wall Street had shoved it up on fairly light volume, but still one of the heaviest days of shorting, even into light volume, was telling you that maybe it was time to exit stage right. We're going to go in on and how to put that together. And in that example coming out today with the link in the newsletter or on the website, it shows a little bit of Apple and the shorting that started in Apple. But you can take a look at that. What else do we have going on out here? Lots of stuff happening. Yahoo is embracing the Romans. I always hate it when people talk a great deal about decimation, because they always mean that basically it lost 90%, not 10%. The Romans actually took 480 soldiers together, and 1 out of 10 of them had to be put to death if they ran away from a battle. That's truly what that's it. Of course, Yahoo is doing the same thing. It's taking 1 out of 10 employees and shoving them out the door, much like the Romans. I got to sneeze. And I'm back from sneezing. What else do we have go here? Apple and Tim Cook. Oh, I've got my new theme song for Apple.
I'm all out of love. I'm so lost without you. I know you were right, believing for so long. I'm all out of love. What am I without?
Oh, how the people came out today.
Say that I was so wrong.
They were so wrong. It was kind of interesting on CNBC. They had a kind of endless parade today that I had to laugh about. And they had all these people on bad-mouthing Apple. And they were asking them, well, how many shares do you have of Apple? Oh, we sold it all last year. So if you're ever wondering about distribution, it was confirmed all day today by a variety of people who were asking, why is the love gone? I guess I could play that song too. I like that Air Supply song too. There's no love left for Apple today.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. They did get it up on the website, so in case you're interested in taking a look at that, look under breaking news. It's got a link under there using short volume to profit in both sides of the market, long and short. If you want to participate in maybe a short squeeze in the near future, we'll talk about that too on January 20th. But right underneath there, under breaking news. Of course, Tim Cook probably doesn't like that everybody's all out of love for Apple, back under $100. As of September 26, Cook held 3.1 million Apple shares that have not vested. Basically, he's got quite a little bit of move, but he also had a pay package that set to him to get $500 million if he kept the stock over a certain price for a certain amount of time. And basically what that was the people that wanted to exit stage left wanted somebody in there that wasn't going to do anything stupid or spend a lot of money, but prop the stock up while they exited at stage left. They got what they wanted. The question is whether or not the company will hold up to highs long enough for him to cash out big time. I think it's, if I remember right, it's probably going to be something like 70, 75 bucks. They're probably not going to hell in a handbasket, but at the same time, what else can you say? But they're all out of love.
I'm all out of love. I'm so
I need a lighter, don't I?
I know you were right. Believe
Anyway, I'm going to have more fun with that than just about anything. Special guests today for the rest of the day on Tom's show. Sean Wright from Cardin Capital is going to be on with Tom and Mr. Andy Heck. And in Andy's Heck, The World According to GARP with Gavin Dumke. If you don't know what GARP is, it's actually risk assessment. It's not the movie. But catch him with Andy, the Andy machine, on at 5 tonight. Anything else? It is a mad, 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 mad world. So we're going to start looking at some stocks. If I can find my chart, we'll get it back up and start looking at some of the movements out here and seeing what's going on. Still think we have a little bit farther to go in some of these stocks, even though we have a lighter volume. We may be permutating around a bit. Some of these stocks that have made a huge dome top still have gaps to fill back here. Applied Optoelectronics, AAOI, is out here. And yeah, can we get a little bounce out of here? We could. But there's some things that are so close to these long-term gaps and what are called, or what I heard called poly trend tops. The idea is that if you put a contact lens over the top of the chart, you would kind of incorporate the highs out of it. And it basically gets back to the original gap up inside of strength that started the whole thing. This case, May 8th of 2015, this thing gapped up with some decent volume of about 566,000. Now, we're kind of back into those candles now with 200,000. But don't think if the market's going down that this thing probably won't go back and tag it. So there may be some deals in things like AAOI in the coming weeks. But my guess is I wouldn't touch this thing with a 10-foot pole or any stock until, man, it made some very good signals. Again, we're talking about a lot of these stocks coming back into gaps. Not only that, but countries themselves. Man, did we have a gap fill on Japan, AAXJ, he said. Dyslexia, there is a cure for found. Nice gap up on this one that set that gap that's been around for a while out here. Goes back to, what is that, August 25th of 2015. Ex-Japan, let me put it that way, Asia. And, of course, we got that fill with a little hammer candle out there. Not a lot of volume either, at least in this index so far today. But we'll continue keeping an eye on that. Some of the other ones out here we want to look at. ACC. Some of these stocks are actually holding up kind of well, and these may be ones that you want to keep an eye on. As always, you can give me a call at 877-927-6648. Post a message in the den or email me. I think I got a couple of emails to get to yet. We'll get to those here probably in the end of the segment or next segment, or a phone call if you call. Anyway, American Campus and Communities. Kind of interesting that this one's holding up. I guess if there aren't going to be any jobs, everybody's going to college. Yeah. Anyway, not a lot of movement on this one, although it's been up here at these highs for very light volume. October 28th, we saw $41.58 with 1.8 million shares. Saw this thing actually touch on less, half the volume, we'll call it that, on January 4th, but hadn't really rolled over yet. I'm not a big fan of all the energy on this last leg, but some of these stocks that are okay may still be holding up into earnings. And in this case, February 22nd on American Campus and Communities. I guess we have to wait till next year for everybody to move back out. Again, we've been talking about a lot of these stocks coming back to big gaps that have formed and signs of strength. And the volume's not all that big. We may be finding some of these retail stocks back with some kind of deal. ACO Brands, ACCO, popped up on July 30th of 2014. So it's taken a while to get back down here. Almost 1.9 million shares on that date. That set up a sign of strength and a gap that is taken a while out here. We are coming back down to those now. Just 540,000 shares, 550,000 shares so far in this. Probably not anything I'm going to get all excited about, but you know, not a bad trading range over time from $6 to $9.45. Back up here at the top. And I don't know, maybe retail still got something. There are a few stocks out there over the last couple of days that look like maybe retail may be washed out a bit. I don't know if that stock it looked like it moved on a glacier-like scale. Probably not for me. Other stocks filling gaps out here and looking at the volumes on them. We have on September 11th of 2015, a nice pop-up in ACET, this ACET. This popped up with 1 million shares, kind of came back, tried to test the gap a bit back on the 16th. I like it to at least fill 3/4 of the gap before I will bite. This is actually coming back in. Fairly light volume, just 130,000 shares so far today, compared to that 1 million share bounce up. Let me get some more information on this company here. Where is the profile? Market sells and distributes pharmaceutical intermediates and active ingredients, finished dosage form generics, agricultural protection products, and specialty chemicals. Anyway, not a bad looking chart out here. You've got one more gap underneath this, and if the market's as nasty as we think it is, yeah, nasty. I'm going to have to get that song now, too. Nasty. Janet Jackson. Wouldn't that be a good one? Because that's what these markets are now. Just nasty. Nasty. We'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. EverBank is a member FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're going to go out here and look at a few other stocks. Again, you have plenty of time to give me a call and or email me at path@tfnn.com or use the telephone at 877-927-6648. 2 questions. First is from Peter. He says, biotech conference begins on January 12th. Earnings to be released on, what is this? XBI. And what is it? Yeah, anticipate pre-earnings run on biotechs before we finally collapse. No, actually, I thought that they're actually acting pretty well, considering. The problem I have with anything in the biotechs is when Hillary gets going. And right now, she's kind of been very quiet, other than a few stabs at the Donald. But I suspect part of her big platform is going to be beating up on these guys yet again. We've had a kind of a quiet period while the rest of the people have been out. But right now, with 6 million shares, I think 59.84, $59 looks like it could be kind of at least temporary support out here. So far, the energy just the last couple of days is interesting. But I have a feeling, you know, we had a pretty good move off the highs already for bio. And I think maybe this one's going to hold up a little bit better than the rest of the stocks that were up at highs already. I think I've said that the last few days, and that is that we're probably finding a lot more support for stuff like the Russell 2000 and stocks that have already been hit compared to stocks like Amazon and some of these other FANG stocks that have come off now with heavy volume. It's their time to kind of pick up the action a great deal, although I don't think anything's going up. I just think that maybe we're probably much closer to some kind of decent value in some of these stocks that have already come way off. But again, we get a meltdown. It isn't going to change anything. How high could it go before the big dump? You know, if I was going to short this thing, you've got 3 gaps out here, and that's what would scare me. I think you could probably make a good case that these 3 gap downs do get filled, and that would take you back to $70. And that is Peter, although Peter does not tell me where he is from. So he is from Lutz, Florida. Another question from the guy that's from vtex.com, who never gives me his name, says, do I see $30 oil? I think that's very tough to say right now, because if we see the same kind of continuing action from the Treasury of throwing dollars around and watering them down, you know, we could see kind of at least some kind of pop out here in crude for a while. Right now, what are we off 68 cents? That would be my problem, as I hate always seeing somebody with a wad of cash ready to dilute the dollar on us and cause a real problem. And that's why I think that there are probably better bets out there that have nothing to do with the dollar out here. And of course, if you are thinking that they continue on, the gold trade is probably the way to play the continuing devaluation, competitive devaluation between us and Europe and Asia. So, could it be? Yeah, I just think it's very unpredictable at this point because probably nothing more sensitive to this kind of manipulation right now than oil and gold, and probably a few other commodities. But I'm thinking those guys are going to get the brunt of the move out here. You've got a couple of nice volume days out here in the XBI also as a side. And normally that gets you into some kind of capitulation, exhaustion. So yeah, I would be waiting for some kind of pop higher before I re-shorted this. Akamai, another one of these stocks way out there. We got some people out here in the den. I'm just reading everything. Okay, getting the negative press. Akamai out here. Another one out here in what should be fairly decent support levels. We'll see whether they hold in the next day or two. In fact, let's check on the S&P here real quick. Well, we kind of bounced off those lows. We're up to 1951, not giving me any kind of warm and fuzzy feeling going into the end of the day. In fact, if we're 10 points higher, there's probably an 80% chance that we head closer to that 1941 by the end of the day than head higher. I don't think that there's much of a bounce in this market until we get to Monday, where maybe everybody is calmed down a little bit. So I would and will probably remain short through the close of Friday, unless I see something miraculously change. Anyway, on Akamai back here, nice, huge sign of strength. Started this whole market headed back up. That was on February 6th of 2014. And you had 14.5 million shares that day. And of course, we're now coming back in. At first time you came back into it was with 3.5 million shares. You got a nice bounce, 5.5 million shares. And then you had real nice bounce up to the recent high of May 14th, 2015 at 78.44. Now you've got pretty much the completion of an ABC down. But again, against that support level, volume not all that exciting out here with 2.4 million shares. I still think, though, until Monday, there is enough fear in this market. And, of course, margin calls, maybe at the end of the day, maybe into tomorrow. Normally, they do not let you out of a market that easily, and especially on a Thursday. So as a betting man, I would be putting the odds at about 80% of lower prices through Friday. But some of these stocks are, maybe on Monday, might be setups for a little bit of a bounce. Let's see what else is out here real quick in my list of stuff. Come on. What are we at here? Did I just freeze everything? No. Is that it? Hang on just a second. I think I lost my feed for data. Let me get this back up real quick. And we just got about a minute to go. Just a gentle reminder, check out the front page under breaking news, of course, for my webinar. Also, make sure and hang out with us in the 3 o'clock hour with Tom O'Brien, Andy Heck, and his special guest. And then, of course, Andy in the 5 o'clock hour again with his other special guests. So we've got a lot of stuff going on out here. I'll have this back up and running for us and a few more stocks to look at before the end of the day. You still have plenty of time to give me a call on the bat phone, 877-927-6648.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
I have a question. This is Steve from Broomfield, Colorado, and not Steve from Lutz, Florida. Direction small cap 3X shares. My question on this. I mean, these things are looking pretty good. Again, as ugly as this market is, I would want these things to come back and at least test the previous gaps, if there are any out there, before I look for a gap or a pop. I think we could see that tomorrow, but I would probably want at least a day or two under my rudder out on the ocean here before we did it. But there's a nice gap that goes back to July 5th of 2013 on the TNA. And I think you could get there. That's not that far down, $50 to hit that. So I would be on the shy side of being brave. Don't get me started with singing Billy, Don't Be a Hero. I think we did that, was that on Monday or Tuesday? I started singing that song. I still don't think that there's any reason to be a hero before Monday in these markets. So I'd give it 2 days. Just hold your breath. Other stocks out here getting slammed because of their association with the Chinese. Las Vegas Sands, this down on heavy volume. It's getting into these previous lows back from August 24th. Also, why it hadn't pierced it, kind of into the October first low that had 7.5 million shares. This is not one of these stocks that does not have volume. This has volume, already 10 million shares today. Now, it hadn't pierced that low, but man, it's coming in there hot. It's going to come in there hot. It's not going to come in there easy. So we want to keep an eye on some of these others out here. The energy so far is not that bad. I'll see it. What else do we have out here? A couple of stocks actually higher, but for the most part, that's it. Let's take a quick look at Baidu as one of the other companies out here that has, of course, is China exposure incarnate. The question is, what's this going to do tonight when they open up the markets and allow everybody to sell whatever they want? I'm unsure whether or not that 5% still is off the table or not. I've been trying to find that out today, and it didn't really make it plain on whether, when they said the 5% curbs coming off would mean that people with more than 5% would be able to sell. But certainly with Baidu out here, that would be a problem. You've got 3 big gaps. We're into the first one out here. The second one goes to 160. The third out to 120. It would not be inconceivable that on this run we see at least that gap back on 120 filled. And of course, that got spiked on the August 24th low down to $100. So, I mean, there's a lot of very dangerous trading going on, especially in some of these stocks with China exposure. Until we see what's going on after and tonight, that's it. KBH had earnings out this morning, pretty much infected the rest of the housing community. This thing has blown through its previous lows now fairly significantly. And again, on this one, you've got a gap that comes out just under $9. And I think we could see that gap getting tested. That goes back to June 29th of 2012. That had 27 million shares back on that. That actually a sign of strength. But those are still open out there. And, you know, this close to it, could you get a test of it? $9, not that far away. One really horrible day like tomorrow with a little bit more of the China syndrome, and you could be there. In the meantime, sell when you can, not when you have to. Cover your shorts when you can, not when you have to. Also. And we'll see you tomorrow, same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.